Hi, today we are talking about architecting fintech resilience. So, leaders, founders, and innovators, we are operating in an era where fintech risks are not just evolving, they are compounding. You know the reality. The speed at which you scale is directly tied to the trust you maintain. One major regulatory breach doesn't just result in a fine, it costs you your banking partnerships, your reputation, and ultimately your business. Today, I want to touch upon shifting our mindset. We need to stop looking at risk management as an obstacle to growth. We need to start treating it as a core product feature. If you want to build a resilient fintech, there are five strategic pillars you must hardwire into your organizations from day one. Number one, as I mentioned, day one. So these controls, this risk management concept should be built in and not bolted on. Too often, founders bring in the risk and control experts late into the game, usually reacting to an audit, a regulatory slap on the wrist, and or after a financial loss. By then, forcing compliance into the system breaks the user experience. You must integrate these controls into the early life cycle of your product, anticipate the risks, pre-plan your disaster recovery. It is the pre-preparedness and not reaction that wins any game. Second is third-party risk management. So you are only as compliant as your weakest API partner. Today's fintechs operate on complex webs with contracts with banks, payment gateways, unwritten SLAs with government frameworks. You must explicitly define compliance responsibilities in every third party contract, protecting your company from losing its banking privileges because of an external vendor's compliance failure, right? So, next is navigating the regulatory tug of war. We constantly find ourselves caught between conflicting regulations. How do you build a watertight KYC system and simultaneously adhering to a strict data minimization rules, like avoiding a collection of unmasked Aadhaar card? Balancing transactional practicality with ideal regulatory compliance is one of the toughest challenges, especially in the Indian scenario. You need to look around it. For global platforms, multiple overlapping jurisdictions make this a minefield. Your architecture must be dynamic enough to handle these conflicts. Just look at the government systems on VPNs or online gaming. Regulatory shifts can wipe out an entire industry overnight if you are not prepared. Then we have the AML. We have to balance between speed to market and anti money laundering laws. This is the eternal boardroom battle. The business side always demands frictionless and instant onboarding. The risk side demands aggressive AML enforcement. Your data privacy clauses and onboarding flows must strike a delicate balance between driving revenue and enforcing uncompromising controls. And in the end, the defensible failure. So here's the hard truth. In a complex technological environment, a control will eventually fail. When the regulator knocks on your door, what matters is your audit trail. So, can you demonstrate a comprehensive trail system? Or can you prove to them that your controls were operating effectively and there was absolutely no negligence and that all due care was taken? If you can still demonstrate that, you may still survive the failure. As a CEO, your mandate isn't just to build fast, it is to build strong. Stop treating your compliance as a cost center. Treat it as the ultimate competitive advantage that allows you to scale fearlessly. Thank you very much. Contact me if you need any further clarifications.